Yo, shake my hand, 365. And good morning, good afternoon, good evening, wherever you are, 365 students across the world, South Africa, Zimbabwe, Zambia, Swaziland, Lesotho, Namibia, Kenya, Dubai, Philippines. I think I got everyone. And good afternoon, good day, good evening to every single other person out there who generally follows the channel, watches the channel. And welcome to another I guess episode or another live stream specifically on your weekly forex analysis. This is going to be a war room tracking the first big trades of the second financial quarter. You know, if you've been with the channel for a while, you'll know that we've been kind of like purely moving slowly by slowly, week after week, tracking these things. And today I want to do something special. Today, I've got about, let's see, about 13 assets that we're going to scan. So about 10 foreign currency pairs, right? AUDNZD, AUDCAD. I'm going to look at silver, NZDCAD, USD China yuan, EURNZD, pound NZD, USD Hungarian franc, USD Swedish SEK, and pound SEK. And then we're going to look at the S&P 500, US 30, and the NASDAQ 100. So that's about 13 assets we're going to scan today. We can also look at crypto if there's time towards the end, right? And I'm just going to give you an overview as usual. I'm a supply and demand swing trader. I believe in top-down analysis. I believe in order flows. I believe in smart money concepts. And I believe there's a specific way to do it and to do it right. And that's why today I want to take my time, you know, and show you something. But here's a cool exercise that I dare and would encourage everyone to try. And this for me was a little bit mind-blowing. You know, last week, Thursday and Friday, Thursday specifically, was the last day of the financial quarter, the first financial quarter. So as an academy and as a trading flow, we had to close. We had to start, balancing our books. We had to do some stock rotation stuff. We had to do our reports and all the stuff. And I want you guys, please, I dare you, come to the 365 channel, the one that you're watching on right now after this video. In fact, I am going to make a video for you that will summarize what I'm about to show you, but I want you to do it yourself. Now, if you scroll down through all the war rooms I've done, right, I just want you can go as far back as you want, but we're just going to use the month of March. The month of March would start with war room number 57. You see this war room here? Okay, let's just quickly view it on YouTube. War room number 57 was one of the first war rooms we did that started the month of March. It's actually incredible that you see this. Number one, you can build confidence in the trading style, in the trading system. But number two, you actually get to see for yourselves that the stuff that we're teaching and the stuff that we're routinely doing does work, right? Supply and demand does work. Smart money concepts does work. I think my little boy might be playing video games in the other room. So I'm going to experience just a little bit of a delay with my internet connection, right? But anyways, in this particular war room, and like I said, right across the channel, from war room number 57 all the way up, including war room number 58, which is this one here, they're all numbered. 58, which is now the following Sunday, 59 the following Sunday, and war room number 60, which happened last week Sunday. In 4 weeks, I want you guys to hear me clearly and go see it for yourselves. Don't take my word for it. I could be a Forex liar. In 4 weeks throughout the whole month of March, all our supply and demand swing trade setups, AUDUSD was the only trade given in the last 4 weeks in the month of March that had a stop loss hit. Right, we've got a couple of trades that are still waiting to play out, for example, that have not yet been triggered. But in war room 57, 58, 59, and 60, all right, I want you to go back to the war room, see me speculate, see me show you where markets are going to come turn, and then go see for yourself how markets behave. There was only in 4 weeks one losing trade, which was AUDUSD, and even that is so difficult to give it an L. Not saying I'm always right, but if you're in our public Telegram group, there is a moment in our public Telegram group where AUDUSD is in profits, and I say please close or lock or break even, because I don't think this level is going to hold. It wasn't a lot of profits. It dropped about 15 pips before rotating to the upside. And in every single war room since then, I kept telling you guys that AUD is a bit strong right now, but a big sale is coming, right? Let the banks clear out the way. And that's exactly, man, I'm really feeling hot. That's exactly what happened. And so I found this amazing, but don't worry, I've got a video coming up straight after this war room that you'll see it linked at the, at the end of to today's video, that will actually put together all these trading results for you so that you see for yourself. I'm bringing this up because I've noticed a lot of people actually are worried if, smart money concepts no longer working, smart money concepts not being flipped for liquidity rates. And the answer is always how. How do you do your I remember this video for like 2 minutes. I didn't split the screen correctly. But the question is, how do you view your smart money concepts? Do you have rules for your top-down analysis? Do you have rules for areas of value? Are you even aware that you just can't trade order blocks just as they are? Are you aware that there are 6 types of supply and demands, actually 7 different types of supplies and 7 different types of demands at any given chart? Do you understand how those things work together? And once you understand that, do you understand the concept of order blocks and order flows? You can have an order block, but if it doesn't have an order flow, you're going to be in trouble. Do you understand all of that stuff? And then do you know how to do multiple time frame analysis, right, to allow you to have confluence on the different areas of value or supplies and demands that you choose? And this is what I quickly do in these weekly Sunday sessions. I'll repeat myself. You simply come to the 365 channel, you go all the way down to war room 57, I believe, where March started. You look at war room 59. You can choose whichever one you want to choose. You will see 2 things happen in every single war room in the month of March. I'm going to go back and review February and January. Trust me, I will. But I start off with Feb, just to kind of like have a perspective if what I'm doing is still working. I know this year we had a war, we had a whole lot of things switch up in the markets. And I am pleasantly surprised, not only to see it in analysis, but in the P&L, right, that we are very much on track, right? So today, like I said, I don't want to focus on the common charts that we always look at, like the USD pairs and all that kind of stuff. All those are good, but right now, most of my war rooms have covered those. There are many, a couple, like about 4, 5, 6 out of the war room series we did in the whole month of March of trades that are still not triggered. And because of that, and because I've already analyzed them, to make today's war room beneficial to everyone, I'm going to look at completely different assets, or rather assets we actually haven't looked at in a very long time, so that we can cast our net wide and we can start plotting our trades. If you don't know me, by the way, I love to set and forget. It helps me manage my trading psychology. I'm not always too focused and bogged down on the screen. And because I'm a swing long-term trader, I'm very careful with how low I drop in the time frames. In the same channel, we do these London sessions sometimes, if I'm free in the mornings, where we can look at intraday time frames, intraday trading levels. And we've done about 20, London sessions, about 19 to 20 of them, and they've all done quite well as well, right? So we have to balance ourselves out, know yourself as a trader. What kind of a trader are you, right? And today we're going to look at swing setups, and then during the week we look at intraday trading levels. Now, I just thought I should start off with that today, because every Sunday I'm out here giving out free signals, but also teaching a little bit. And I wonder if it's really sinking. I mean, those of you who attend religiously, I was happy to see, someone in the public Telegram group was like, don't buy me that book. I'll use the profits from the war room. That was encouraging. That means there is absolutely someone, just one person is good enough for me. Wherever you are, how many you are, who are watching these things and you're taking these things seriously, I appreciate you. Right, so let's quickly catch up with the markets. Before we go look at the chart, supply and demand, blah, blah, blah. I always like to see how the week closed and why the week closed the way it did, because it always gives us a fantastic indication of where money is, right? Remember, we need to locate money in the broader framework of things. Support and resistance won't move money. Indicators don't move money. Technical analysis don't move money. Money moves money. We use smart money concepts to understand the direction of money. Human beings and traders are random. Therefore, trading is random. I get that. But when smart smart money has a decision and a target. Markets stop being random. There is a fulfillment of price. That price needs to happen. When we teach this in our course, we talk about filled and unfilled orders. So today, like every other Sunday, we're going to locate where the unfilled orders are in the chart, right? And then we're going to go match that with our account. Then we're going to set and forget and wait for it patiently to happen. Right, but Friday was an interesting close in the market. On Friday, by the way, I've already closed the YouTube channel, the 365 YouTube channel. But anyways, on the 365 YouTube channel on Thursday, just before NFP, we did a big take on the 10-year plan of the financial markets. We looked at Ray Dalio's perspective, and right at the end of that Thursday night, I told you guys exactly what my thoughts were going to be on NFP. I did tell you that there was a high chance that NFP was going to be negative. I explained to you guys the average hourly earnings, and I posted a post the following day, and you saw for yourselves, right? NFP was negative on Friday, right? And that's it. I only use supply and demand. I only use smart money concepts. I just love to research the markets, but my research is focused on understanding what big institutions are doing. There won't be time today to bring out the COT report. Normally on Sundays, I like to give you guys an overlook. Maybe during the week I can upload, the latest data around COT, and then we can discuss this. But NFP was negative, and I've already done a video explaining the NFP results, so I don't want to dwell, so much on that. I'll remind you a couple of things on the table in the markets right now. Interest rates hike, by FOMC. Again, my perspective is, even if the markets want a 0.50 basis point, even if Goldman Sachs and JP Morgan keep calling out for it and other institutions, Powell is going to stick to the plan up until August. The first time I want to see a market rug pull, which won't be by then, will be around about August-ish, right? I could be wrong. Things could change, and that's perfectly fine. But the main CPI data that's going to matter is the CPI data that's going to drop from July, August onwards, because already the FOMC, specifically Powell's already told us that he thinks inflation peak will only happen in June, July, right? So there's nothing until then. In the next meeting in May, we're probably going to get a 0.25 basis point. But if I start to feel like they're going to change and switch things up, then we shall see. But, NFP, this past big jobs report that just happened about 48 hours ago on Friday, I think is an indication of why Powell might slow down, right? He might be like, okay, that's cool. Because if the average hourly earnings had come in hot, 0.5, 0.6, they came back at 0.4, which was the general expectation, right? Then that would have given us the credence to say there's a wage spiral. Right, a massive wage spiral, and it doesn't help, right? You can see the two big things here. Unemployment is still at 3.6. Let me just make sure you guys can see this properly. I'm sure you've seen these results anyways, right? My point is, I don't think there's anything, strategically different from this big report. Yes, we didn't make, NFP, but it's not really that much of a big deal. Overall, it was a good jobs report. As long as unemployment is dropping from 3.7, from 3.8, 3.7, 3.6, and getting very close to that magic 3.5, and inflation numbers are getting close to that annual rate of 4.8 that FOMC wants to see, right? So that's kind of like what happened on Friday over the markets. There was some strong reaction. I did tell you guys that NASDAQ was probably going to bleed out quite a bit. So just look out for that. And those of you who are paying attention, I'm pretty sure you would have seen NASDAQ drop on Friday. Just a little bit, right? Nothing too crazy. There we go. And I drew this trend line in the morning. I told you guys that it was just a trend line on the lower time frames. This trend line would not really stick on higher time frames. So when I made that analysis, it was still trying to climb here, then it fell. When NFP dropped at 2:30 p.m. and then spent the rest of the evening, Friday night trying to recover from that fall, right? So that's kind of like how markets work, right? Real quick, just spend 2 seconds on these headlines. Right, Fed President Williams says balance sheet runoff could start next month. Well, here's to hoping. NZD to outperform AUD ahead of next week's Reserve Bank, of Australia, right? So that's interesting to look out for. And we could look ourselves as some plays there if you want. America FX News wrap up, strong jobs report keeps Fed 0.5 basis hikes as most likely. So these guys are saying something different. They're saying, look, man, most likely we're going to get a 0.50. I've told you guys how headlines and news and fundamental analysis works. I'm sticking to my 0.25, not because it's the right thing for the economy. I'm just saying that's what I think Powell is going to do. But I know the market believes Powell is behind. I believe he's behind. I think the Fed knows that already. We watched Ray Dalio's take on printing money, the impact of a change in world order. We know exactly what's going on now, but I don't think it's going to stop them from maintaining, the plan. But if things change, ahead of that in May, I will definitely be here, ready to kind of like, update you on exactly what it is going on. But the markets have seen a new jobs report, and seemingly the markets want to see, a Fed. You remember I introduced this tool to the channel a while ago, right? The Fed rate monitor tool, and it's just like another normal speculation tool. So there we are. You remember that every time I show you this, and just a week before the actual announcement comes out, please remember how different it can be, right? When people go, oops, and they change their minds. But right now, the idea is on the 4th of May, 2022, the next, Powell meeting, right? There's a lot, like people really want the rate to jump up to as high as 0.75. Forget 0.50 basis point. People are calling for a much more aggressive interest rate hike, right? So that's about almost 70% of speculators at that particular time. That's what the market wants, which would kind of like change what the year-on-year looks like, right? So if things continue the way they are right now, and if this speculation of May, June, July, all the way to December is correct, it could see us back at about 2-ish% or at least 2 to 2.5% annually, right? Which is where 70% of the market right now is kind of like pushing for, right? I don't know if Powell is willing to be this aggressive. We shall see. Any type of aggressive action on interest rate hike is good for the currency, but the stock market will be spooked, right? The stock market will it depends if it's well planned and well priced in, right? But we know that 0.50 on a basis point in May could really drop some stocks, but we shall see. We shall see close to the time. Right, key events, right? There's really not much. So I think we can just go straight into charts. European Commission says gas companies should pay Russia in dollars or euros, not the Russian ruble. I guess that debate is still going. New lockdowns, COVID lockdowns in China. I think I saw something about COVID lockdowns in the UK as well. I could be wrong. It could have been a dream, but I think I did say a headline like that. Major European indices closed higher on the day. That was on Friday. Right, another Fed chair, no, not Fed chair per se, but Evans, it was in the Fed, is saying it's not a big risk if the rate hike path includes some, 0.5 points basis hikes, right? So we've got a lot of hawkish members, not a lot, but the hawkish members in the FOMC are starting to speak up, right? So this could change the game long term, right? Let's close this. Now let's just quickly do a heartbeat scan in the markets, right? So we've got, like it said, European indices closed quite well in the pre-market tonight when markets open. Nasdaq was a little bit down, but I explained why. Look at oil. Oil has finally come down below $100. I think those of you who are in that beautiful oil trade with me, I told you to wait to lock profits, and I'm sure you by now you know that we were kicked out in profits, right? Markets did break that H4 order block. Meaning, price is going down. Because oil is not part of the charts I want to discuss today, I just want to quickly show you something in case we don't talk about oil this week at all. So I had 3 positions in oil, 2 were triggered and 1 was not. And I think we spoke about this in our previous war rooms. This is the H4 area of value that I said, look, just lock your, if you bought down here with me, right around that 95 level, right? Take profit 1 was here. We remember we to clear the supply here, which we did. As soon as markets got there, we took take profit 1, and then take profit 2. I wanted to swing it. To be honest with you, I was hoping price would get to 120, and it didn't. And we locked just below here, and markets have kicked us off, right? And now, for me, if I was to remove this area here, this big old area, right? Because this is where I bought the first time. I don't want to buy again. Markets could come back, right? I've got the 3rd pin in order that I'd opened but was never triggered is down here. So this is what I'm waiting for now to see. right? And this really could be a beautiful stop loss hit, right? So just be mindful of that, right? But the two buys here worked out just perfectly. It's unfortunate that the second big target of 120, we just never could hit it. I've done my course, you know, we had an original turn here. An original turn is done by institutions, and we need to kind of like figure out why, right? Why was there an original turn? Track for imbalances, break that area down, and then start to plot, you know, your next target, right? But for the most part, I think markets might come back and sit there. That would be nice. But if my stop loss gets hit there, you know, it wouldn't be a big deal. I am playing, you know, very low risk, and I've made a little bit money, like some good money on oil, right? But that's all I'm waiting to see, right? There is this perception as well. I'm just not open to it because of how obvious this area is, right? So this is very a clean possibility, but it's playing off the old levels, right? So just be very, very careful. Like, we like not only good supply and demand areas, but we want our supply and demands fresh. We really want them, you know, uniquely fresh as possible. But this has got, you know, there's some trend line support, a valid demand there with some valid imbalance, right? So this is at play. But personally speaking, I suspect that, you know, if markets were to be very nasty, they would sweep the floor here, take everyone out, liquidity, and then maybe trigger someone like me down here, or just take all of us out and push down, right? And then we'll be now looking for some classic old school module one demand levels, you know, later on, that are still fresh, that markets still have to return to. So yeah, watch out for these two levels this week. The yellow zone, I'm just putting it out there so you know, and you also have to deal with a lot of supply, you know, very close by. And so as a trader, you need to make a decision about your risk to reward ratio, right? You know, and remember, oil has been extremely sentiment-based, been a sentiment-based trade off the war, right? So let's talk about the war. Ukraine claims control of Kyiv. Oh, really? As chances of peace talks advance. Remember, this is very good for the market. This is risk on. Slowly but surely, we're climbing out of risk off back to risk on, and says nearly 18,000 Russian soldiers are dead. I mean, you know, in war, you kind of like have to just understand war from a historical perspective. I never believe any war headlines as they happen, because, you know, everyone is writing their own history, right? But anyways, that's insane. But if the war is coming to an end and the peace talks, like I say to you guys, are advancing, and it looks like, you know, there's going to be an end of a war, then we can start to talk about a strong risk on sentiment, and oil won't necessarily need to skyrocket up. So the buys for oil, you know, were these ones, and then, you know, this that we just tried to retest right now, which technically made it all the way to a supply. So this made it all the way to a daily supply. It's just that my, you know, when you get lost on your smaller time frames, you miss the bigger picture, right? So I wanted a deeper touch at 120, but markets completed their cycle, I see, right? So my mistake there, right? But yeah, so watch out for this, right? So enough about oil. So yeah, so markets are kind of like, you know, US 10-year is doing quite okay, or at least, you know, what we expect. Gold finally dropped below 1933. We spoke about this level quite a lot. You know, Palladium is still hanging on for dear life, but I'm pretty sure that will soon follow suit. And then crypto, Bitcoin was just knocking at heaven's door, you know, at that almost close to 50K, and then dropped quite a bit. Bitcoin led the fall, guys. So on Thursday night, Bitcoin was falling before equity markets started to fall. And I've always told you guys, there's a coupling between crypto and equities. I don't know why, but it's there. If you study your charts, it's there, right? Those of you who bought Bitcoin Cash with me at 313, 323, and 333, you know, this is doing exceptionally well. I spoke about this in the war rooms. You can see for yourself for 378. You know, so yeah, okay, so there's not much going on. There's not much going on, right? So let's get down to the real work of the day, folks. Let's look at some charts. Let's map up some signals, and I'm happy because I am, you know, not really, I don't feel rushed today, so I will be, you know, teaching a little bit. Normally, you know, these weekly things, I just want to map out some zones. Right, the first chart we're looking at is AUDNZD, and this is really for a lot of our brothers and sisters in the world who are slowly but surely, you know, drifting away from the idea of smart money concepts. And I think it's because of how you do it. It's because of how you do it, who taught you, And even if they teach you properly, what are you applying, right? So AUDNZD, guys, from a governor perspective, in 365, we name our things, we really model our trading strategy around a long term of back-tested stuff, right? Remember, we back-tested the stuff for almost 3 years in a row, making sure we understand this before we even started teaching people back then in 2019. Like, this was a lot of time put into this, right? We've got what was previously a sell profile asset, right? And I'm doing this on the governing time frame. Governing time frame. There's a presidential chart, it's a 3 month chart. I won't even get into that because most retail traders use the free trade view, so they don't even have access to the 3 month chart. But you've got enough information from the governing time frame, right? So now check this out here. Now we've got this compression zone here, or somewhat of a compression zone, really more of just like a basic triangle where markets are kind of like set in the same place, taking out a demand I see to seek lower, created a new demand here, which was like a recovery asset. So remember, you've got risk sensitive assets like euro, pound, AUD, risk sensitive assets, the equities, basically the entire stock markets, crypto. All these are risk sensitive assets. I want you to study all these risk sensitive assets. Go to all of them on the governing time frame, the weekly time frame, and look at March 2020. You will see there was a long-term recovery after the COVID crisis. All of them moved at the same time in the same way. I want you to come back to the same risk sensitive assets and come to the 14th of March 2022. You will see on Valentine's Day this year, February the 14th, I said the markets were 30 days away from a full stock recovery. 30 days later, on the 14th of March, it's all on the channel. It's all recorded. I'm not like spouting magic stuff. It's literally on the channel, properly labeled, right? I do these videos live. Most of my stuff is live, not even pre-recorded. So go back in time now and see 14 March 2022, and you'll see V-shaped recoveries again in the month of March, again just before the first financial quarter ends. Why? Because smart money has a schedule around rotational flows of money, right? So now, there's this demand here in March 2020, and markets kind of like find a base in here. And there's this descending, ascending triangle. I don't even know. I'm not a patterns trader. I really never pretend to be B1 flag structure, whatever you want to call it. But the important part about this whole thing is markets have steadily been moving back to the upside, at least for the since November last year, right? So for the last give or take 5 months, been a very, very steady climb to somewhere up here. And with AUDNZD, questions are about to be asked. I think one of the headlines we saw just said NZD was going to be outperforming AUD in the future. I'm not saying we believe headlines. I'm simply saying we come to the charts and we see what on earth is going on, right? So I've dropped now to the weekly time frame, my mayoral time frame. I do remember us marking this out in a previous war room a long time ago about markets returning here. Unfortunately, I don't remember taking this trade myself, especially if it's marked in red. It means, it was a level that I believe price was going to bounce from. But probably at that time, I assumed it was going to be a cowboy trade, a high risk trade. So because of that, I didn't take it. But, markets used it. Right, so markets rocked on all the way up. I haven't been in AUDNZD in a long time. That's why I want to look at a lot of these markets today, markets that I haven't specifically traded or that I'm in, and I'm now looking to kind of like rotate, lock positions, show you guys new places to enter, etc. And AUDNZD is one of those, right? So once again, I think I moved too fast or was just talking too much, right? On the governing time frame here, markets have almost arrived at their final phase. Really, and the question is quite simple: are you going to break out or not? I mean, it's as simple as that. Are the markets preparing for this within the second, third financial quarter in the long run? And if they are, what's exactly where is price going right now? There's a couple of things to be mindful of on the charts. We've got a PCP a platform here, PCP. And I really want you to understand this. There are many different types of supply and demand, and because there are different types of supply and demand, they come with different types of rules. Not every single supply and demand is strong enough to carry order values or order flows for you to react to that level the same way. Some of them are more sensitive than others. We call those PCPs, potential continuation patterns. What does that mean? Well, if I'm going down, right, if the trend is down, if it's a sell profile asset, there are small places where smart money will leave money to continue the trend, but they are potential. It doesn't mean it's a guarantee. And the only way to guarantee it is to couple it with a couple of rules. Number one, clean imbalance. Number two, the number of hits that area of value takes. And this particular PCP, in my humble opinion, the way I would trade it anyways, I would not trust it. It's just that it's a governing supply, right? It's at a very big time frame, right? So that's why, you know, we can do this. But if you sell this on a daily time frame, H4 time frame, H1 time frame, and you try to take a sell after markets had been there at least once, you probably would have been liquidated most of the time, right? So now, you know, for me, this is a real possibility, you know, personally speaking. I don't know yet, right? So that's option one, where markets could break up to the upside. There's not really much supply here, you know, holding price down. You know, bearish engulfing candle just caused the buyers to kind of like trade sideways for about 2 months, creating potentially a bullish engulfing pattern here if you look very carefully. Right, and I'm doing this first on my governing time frame because remember, top-down analysis is key. You need to understand the flow of money, right? So now, because of this, I mean, this to me is hella bullish, right? Not only did you, break this out, not only is the supply on the other side of a bearish, structure which was broken by a different type of order block, right? A buyer's order block, creating another buyer's order block, right? There's a high chance that we're looking at a 4 to 6 week setup, you know, for some higher push up. Because of that, AUDNZD, I'll be looking for buy setups. I start to move down now. Now I can't buy in here. I can't buy at an activated weekly supply. Even though I now think I know the direction of price, I have to be smart about where I buy, because the rules of supply and demand don't supersede the universal principles of supply and demand, which is buy low, sell high. I have to find the best place to buy low. And there are many ways to do that, right? I could create a curve, a supply and demand curve, right? If I've taught you before, you're gonna see me do this real quick and a little bit different. This is the weekly time frame. I just want to know about this particular market phase in front of me. I just want to know about this market. I'm only going to do this probably with 1 or 2 charts, guys, where I go very deep, because I really want to, analyze about 13 charts, and I don't want this video to be forever, right? But if I've told you before, in our module 2, we talk about the supply and demand curve, the power of the curve. Why? Because there is an absolute curve in every single supply and demand leg or phase in the markets. And the nice thing about the curve is you want to answer the main question: am I too low in the curve? Am I too high in the curve? It's the right time to buy. So I can see that this is where markets started to drop. I can see we've got a W pattern, almost a V-based pattern, a value-based demand, whatever you're seeing, whatever you are taught to see, it doesn't matter. Where are you in the curve, right? And so I'm just going to quickly do this. I'm going to do 1. And all of a sudden, I get to see exactly where markets are in the curve. So somewhere in here is 50% of the curve, and it makes sense. We can see markets even came back and dropped. You could have done this with the Fibonacci. The problem with the Fibonacci, I love the Fibonacci, by the way, is I need Fibonacci to act as a confirmation tool for entry. Right, so I'm not going to use the fib right now as an analysis tool. I just simply need it as a confirmation tool for entry. Right, so now I know where all my sellers are. I've just marked out all my sellers. If I draw the order block a little bit much more precise, you will see that we're in the 75%, 100% of sellers within the weekly curve. Do you want to buy there? Do you want to buy where you have identified that the most aggressive sellers in AUDNZD are there? I don't want to buy where the most aggressive sellers are. Right now, each to their own. Trading is basically a long-term game of calculating risks, applying risk management, and then making sure that you are taking more from the markets than you're losing. It's that simple. It's somewhere here, right? So this is probably not the most accurate, but I've now located a buyer's hub. Not only have I located where the buyers are in the supply and demand curve, I also now know exactly where there's a high chance of unfilled buy orders. And now it's up to price. It's really up to price. This line here marks 50%. markets could definitely drop all the way here and then use that as a base to bounce back. I have to decide if I want to take that risk. I will make all these decisions as I approach it with via multiple time frame analysis. But within the curve right now, today, in the first week of the second financial quarter, I'm not looking to buy anyway because supply is still in control. And I don't know how long the control will be, but I know that markets have found themselves in at least an area of value where 75% of market sellers are at least engaged, right? We can try and be a little bit more contrarian, right? We can look at the client market sentiment. I've shown you guys this kind of stuff in the war rooms before. Client sentiment indicator. I don't know if AUDNZD is going to be there, but if retail traders are looking to buy AUDNZD, that would be an even better opportunity for me to then sell, right? I always do the opposite, but I don't know if there's been enough data collected on AUDNZD. There we go. AUDNZD is slightly mixed, right? Let's open it, right? But you can see there's 68% want to sell, right? So remember, the guys, I'm a contrarian trader. Technically speaking, I'm a supply and demand institutional trader, but my trading edge, loves, to be a little bit contrarian to retail traders. And retail traders are looking to buy. I generally 90% of the time know that there's a beautiful sell opportunity there, and I do the opposite, right? So it's simply saying that, look, man, for the most part, right now, the sentiment is a little bit mixed, right? We want this number to be above 75-80%. So if we really get a massive collection of different brokers, and the data flow is telling that about 75% of retail traders have a sell limit orders, most of them want to sell, then the signal would be definitely time to buy against them, right? So right now it's mixed. 68% for me is not enough conviction to act on it. All right, but it's just nice to see. It's just nice to see that I'm not crazy, that buying up here, right now might not be a good idea. So on the daily time frame, we can start to clean up our areas of value just a little bit. On the daily time frame, we want to understand the peak supply and demand number 6 in the course, peak supply in module 2. So I'm going to quickly use a Kinihashi candlesticks just to identify the actual true peak. There we go. I'm going to do something like that. Then I'm going to mark out an area of competition, which is going to be the wick of this red candle for me in this particular chart. I'm going to make this line white so that we don't get confused later on about what's going on. Area of competition is just, if you follow the channel, if you'll know, is basically where I'm always looking to see where banks are going to compete, whose orders are going to get filled first on the floor, because I want to get filled with those people first and not wait. Now I want to see if markets have already reacted to the area of competition. I'm going to switch back to normal candlesticks and go to my white line. Bada boom, bada bam. Accurate, clean, simple, no indicators, just pure supply and demand, right? So we are just 4 days late. If I wasn't so busy preparing module 3, maybe we would have put this together, but we are 4 days late. Markets entered into a true supply. Look at this, guys. Look at the yellow area, the correctly drawing your area of value. Why am I not getting filled in the markets? You didn't draw your area of value correctly. Why did I get liquidated? Why are my order blocks not working? You don't understand the different types of supply and demand. There are different types of order blocks with different types of areas of values of sensitivity. Number 3, you also got not filled because you don't understand the area of competition, which is different for each different type of order block. I'm hoping those of you who are moving, getting to a place of losing confidence, it's okay. It's part of your cycle. It's part of every single. Let me show you this thing real quick. So this is the 365 traders course. I don't want to do a marketing thing, right? But this is here. I might as well remind you, it's 75% off until the 9th of April. Right, because on the 12th of April, I go live in terms of just filtering trading psychology. Everything you need to know about supply and demand, all the proper order blocks are here. But let me just show you something about cycles real quick. It's probably somewhere, it's probably in lecture 4, lecture 5. how to profile an asset. I think so. Just bear with me. Just bear with me 2 seconds, because some of you have taken the course and you're starting to trade, and I don't want you to forget this, right? So let's see. There we go. Yeah, so I'm correct. So inside this lecture series, remember, this is all locked and private. You can't see it. You can't share it. I've embedded it properly. Blah blah blah. But if you want access to the course, I'll leave the link down below, right? This is just from the admin position. But after the first 4 or 5 lectures of the course, there's a summary PDF that I normally put out for you. Okay, there's always a summary PDF. And inside your first PDF of the course, I explained to you, you are going to go through these cycles. These cycles are absolutely important. There we go. You explore the market, you learn stuff, you develop a model, I give you the stuff, you internalize, you go to a high level of experience, and then you start to lose or your edge is dropping. You repeat this cycle. This is the only way you're going to grow. There's no negotiating around trading. In trading, 90% of the battle is with yourself, not the markets. Leave the markets out of it. The market, generally speaking, haven't changed, guys. As an economic historian, supply and demand, as far as I could go, because of the data I could get, I couldn't get data beyond the Great Depression. But as far as I could go, this has been a good trading strategy since 1935. Right, in the middle of the Great Depression. This is how Goldman Sachs led the US market out of the Great Depression. Right, so I'm saying to you, it survived that. It survived the 1970s, survived new economic neoliberalism introduced in the 1980s. It's gone through different types of versions of capitalism. It survived the tech boom crisis in 2000. It literally helped us trade and make a whole lot of money. For those of you who are trading supply and demand in 2008 during that crisis, it's the same technique, strategy, as a smart money concept that helped us make a whole lot of money during COVID crisis, oil crash, getting Bitcoin at 4,000 US dollars. It's the same thing in 2022. You are the one who needs to make all the adjustments to change, not the strategy. The strategy is fine the way it is. You gotta get to a point of mastery, right? So there's AUDUSD. That's why I say once again, I don't want to buy this right now because smart money is selling. Now, this is not a strong leave from a zone, but it is indeed a fresh touch. And so we don't expect a strong leave from a zone during the fresh touch. If you know the rules, if you come to the course, inside here, there's always a lecture around that kind of stuff. So when we start to break down specifically areas of value, right? So supply and demand, number 1, areas of value, part 1, part 2. Lecture 6 and lecture 7 gives you all the rules of areas of value. We know that this is normal. We know that the first fresh touch of price is always the safest touch and will lead us to the first closest demand. Look at this, boom, and then markets have to go back for a retest, boom, and that's what I think is going to happen. So I'm not ready to buy right now. If my long-term trade is a buy, I would much rather take a risk at a deeper sell somewhere into the zone, which will be the last time I want to sell it, and then maybe, you know, be very careful, you know, take profit 2 somewhere here, you know, take profit 1 is always 50% of the journey, take profit 3, break even, and maybe hold it all the way down there for those of you who are selling. And then the question becomes, am I going to buy again at this level? I didn't like this, right? I know it's a different type of, it's a range, a market consolidation. We call it a Talitha area at 365. I'm glad that, you know, there was enough accumulation to allow markets to rally like this. I don't like it at all for a new buy. I've marked it red. It is my hearts of hearts that sometime in April, it is my hearts of hearts that sometime in April, if NZD is going to outperform AUD, blah, 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 right? If all that stuff happens, my hearts of heart that somewhere here, I get a reaction, right? I'd love to take a fresh trade somewhere here. This will be my swing buy trade in AUDUSD. I don't know when it's going to happen, but I know I'll be waiting down here. AUDNZD done. Let's move on. AUDCAD. Right, so CAD is at an interesting couple of months because of oil. I've explained this on the channel many times. Why oil? Why CAD? Why oil? Why CAD? And you saw for yourself, you know, that oil is actually, you know, starting to drop, right? I showed you guys the oil chart, etc., etc. And so we are, you know, looking at interesting things. Last Sunday in the war room, I think we did an analysis on the currency, CAD as a currency first, right? So not paired with just the strength of the CAD currency. And this is what we got. This is what we got, right? So all our zones are still drawn up. all our zones are still drawn up, right? So this is pretty much you know, a very deep zone that, you know, the CAD currency got into, and now is straightly down. And for me, price is still leaving a supply, therefore in search of an equal demand or an unequal demand, you know, that might, you know, see crash and burn, right? And then if ever you know CXY or CAD, the Canadian dollar currency, strengthens to a point where it crosses over here, then it really does open the gates, you know, for some serious strength. But we better be in some option calls on oil by then, if that's the long-term perspective, right? But right now, I don't even think that's something to consider for the next two or so weeks. 2 to 3 weeks. You know, if peace talks are advancing and all that kind of stuff, then markets need to equalize, right? NASDAQ isn't going back to its all-time highs until this war comes to an end. Believe you me, right? It can move up very well, then to consolidate and come down a bit, but it's got to, for it to open the doors to 16,000, 17,000, etc. You really need to kind of like put a full stop to this thing that's going on right there in the world, right? So AUDCAD, bearing all of that in mind, let's look at the chart now. Right, so this is it, right? We hit you know, a strong demand about 2 months ago. If this is marked, then it means there's a war room where we spoke about this. You know, like I said, most of these charts, I'll tell you the ones that I'm in. You know, while this is beautiful, I'm not in it. I'm not. I don't remember placing a trade on AUDCAD. So, you know, it's nice to kind of like revisit this stuff. But everything that I'm doing today is going straight into my trading plan, and set and forget. I will be marking some zones, setting some order limits, because the assets we've been trading have done well, but we need to kind of like see other things in the markets, man, just before we get into a rut, right? So markets moved, right? Now, Leroy, how did you draw this area of value, and why is it drawn like this? When you get you know, when I teach this stuff, you know, I hate these doji wicks, and once again, I don't mind pointing this stuff to you until it hurts. This is March 2020, right? Recovery, risk sensitive assets like AUD, euro, pound, all of them have a recovery in the month of March. NASDAQ is same. Markets are the same, kind of. Well, there are classes, assets that move in one way and assets that move in the other way. And once you figure that equation out, your supply and demand trading just becomes a better, far much more better. You want to be the only problem in your trading. And for the first time ever, it's 365 on the 12th of April, we are now going to solve you the problem by looking at trading psychology. I'll be teaching it live, by the way, right? Tuesday, Wednesday, Thursday night, just the same way as every single module in my course, I taught all these classes live before I could have the recordings to kind of like upload, right? So those of you who will be attending on the 12th of April for trading psychology hack, please budget 3 weeks. The last 2 weeks of April and the first week of May. It's going to take me 3 weeks to get through the material that I want to get to teach you how to manage yourself. Right now, because it's you want you to be the only problem. If reading charts is still part of the problem, then you need to fix that as quickly as possible, right? Because once you can read your charts, all you have to regulate is yourself. And that's kind of like the place you want to get to, right? Regulate yourself. Now, doji candles, normally speaking, I love to draw, you know, the entire top wicks because of the height of that indecision. But if you don't want to do that, and like me, I'm always trying to secure, you know, the least expensive or area of value, or a small area of value because of my risk to reward, you know, basis, then just try and switch, you know, between a Kini hash and normal candlesticks. You can see where this candlestick closed. There we can start to think about our area of competition, and you can see markets fell right there, you know, perfectly aligned. So that's how that zone was drawn, in case you didn't know, right? So markets have obviously reacted to a demand. It is a recovery demand. It is the demand of March 2020, which signaled to the world that COVID might be killing a lot of people. There were multiple lockdowns in 2020 in March. It's just been the first month. You got to think about this. Dread, like people were dying in thousands and thousands of numbers, and markets were like, yeah, it's time for us to rally now, right? It's time for us to rally. Markets rallied into a supply. We marked that. Markets coming back down from the supply to a demand, right? So this is still, for me, you know, a bit bullish, right? And the first time we should probably worry about you know, how far price goes is when markets get to that immediate supply. It's a new supply, it's a British engulfing supply, it's a volume based institutional break type of supply. and we want to be a little bit worried about, you know, that level when price gets there. But what that means right now is we now know the trend. We now know where markets are going. We now know where markets are heading. You know, and you know, I mean, I don't want to have the debate. No one knows. Markets are random. No one ever knows where markets are going. And I think retail traders say that all the damn time because they don't know what or the experience of trading on the floor. And I think that's maybe my advantage in life is the fact that I've been on the floor. What you mean you don't know where markets are going? Floor traders have all the floor orders in front of them. They stack this thing. Remember, as a floor trader, you don't get paid for being right. You don't get paid for making pips. You get paid for filling orders. You fill orders in the direction of money. If all the institutions are buying and retail traders are selling, institutions are always going to have more money on the buy side. And so the markets are going to lean towards the buy side. I mean, I feel like I've explained this on the channel so many times, right? But anyways, so we've got a clear long-term move to the upside. It doesn't mean it's going to be just vertically straight up, but it means we understand the market direction, which is one thing. The next thing we need to do is to locate a buy place, an entry point, right? So on the weekly time frame, we've got a nice, you know, consolidation. We missed this. I bet you this wick here triggered a daily demand in here. I bet you that wick there triggered a daily demand in there. There we go. Complicated 365 candles, right? Somewhere in here, but don't believe me, you can't see it. Switch to Kinihashi. There you go. It's that simple. At least, you know, at some point in your life, it becomes that simple, right? So, and then when markets did that, markets created a different type of order block, a strengthened order block, right? And the strength order block was a bullish engulfing pattern. And then now you've got these two areas on top of each other. And markets are consolidating on the weekly because they're basing themselves up on this area here. Simple. Now, yeah, I'm not a market execution type of guy, and you can do this on the 1 hour, 2 hour time frame and look for a breakup structure for markets to explode there. I don't like trading that kind of stuff, number one. Number two, I never really take market executions because I'm never really in front of my screens 24/7 looking for setups because of the other things that I have to do within the academy and on the floor. So I won't be looking for any of these plays. The areas of value in front of us in terms of supply and demand matter because some of them can be PCPs, which means we're done for. We can't take another trade. But in this particular case, you could be lucky. Right, and if you look very carefully at how markets closed on Friday, because remember, markets, this is Friday, I'm on the daily time frame, right? You will start to see this, and all of a sudden, there's this ladder effect. There's markets protecting markets in terms of a direction, and all you're looking for is a break of this high now. Right, and so for me, unfortunately, once again, I am late for this particular trade, you know, chart, but I want this equation to play out. Now, if you followed my channel long time, you know I like being first. You know, I never want to compete. I really I find it so special that I am there first by myself with smart money. I just want to quickly look to the left. To the left. Right, so that explains why markets broke there. Stopped there and dropped, and why we have a high there. You know, for my charts, yellow means supply, green means demand. So that's that, right? So now I have an understanding of what's going on at this level here. Now, I would never want to buy a swing trade when there's a supply that close. And it's not a PCP supply, ladies and gentlemen. It is an institutional starter supply, right? So there are supplies that start the movement. Rest is in between a trend, but it was a new perfect start with a bearish engulfing pattern, leaking to the downside, and markets have only come back for a fresh touch. What does it mean? It means all of a sudden I now have better perspective. It means, number one, yes, there was a bullish engulfing pattern that was made on Friday. I see you. Guess what? I don't trust you. You remind me of my ex-girlfriend, aka trauma. Don't want that. Don't want to take money there. Number two, I see you, but you're so close. I don't want you as well because all of you are so close to the supply above. What I do want is something lower, much lower, buy low. And this could be it, right? So I'm hoping that markets do something like this. And all I can do is hope and speculate, right? Do something like this and then come back down and dilly-dally and play with people's feelings, liquidate them, move around. You know, you'll see traders drawing these fancy lines and counting and doing some Elliott wave analysis, whatever makes you happy, man. Another day, I want markets to come down to this zone, which is going to be my buy zone. I'm not buying anywhere else on this chart, right? I don't trust any of these levels. They're too close to a supply. But let's say you don't agree with me. Let me talk to you from a risk management perspective. I want you to tell me what on earth you're doing buying there. How much are you expecting to make? Do you not love your account? First of all, how are you gonna mark your zones? Right. You can't say I'm gonna risk little Leroy, I'm gonna enter here and then put my stop losses right there. Why? Because Leroy, that's the only risk I can take. Well, that's stupid, in my humble opinion, right? In my humble opinion, that's a little bit silly because, well, this area is nested on top of a bigger buy. So if markets want to buy low, they will remove you and react into anything in this particular zone, which means your stop loss, technically speaking, has to be all the way there. If you're going to take a risk, you might as well just enter down here, at least so that you remove this whole zone and you play with this. But here's the other problem. If, let's say, you've thought through that process and that's where you want to buy, where are you going to get out? You know for a fact that there is a valid, very healthy looking supply in front of you here. So you can't buy through it, right? You can't get on a motorcycle and think you're going to crash into a massive building and damage the building and drop the building. There's a high chance that you and your little motorcycle, your motorbike, will be the ones who suffer the pain. So if you're a 1:2 type trader, then that's your setup. If you're 1:2, this is the risk reward ratio, 1:2. You could clean this area up. You could go H1, 15 minutes. You know how they get. They'll defend everything. You know those traders whose psychology has taught them, take the trade. Just take the trade. You're not going to make money if you don't take the trade. That's true. But take logical, consistent trades that put you at odds, at high probability odds. Take high probability trading setups, please. There are multiple rejections here. What does that mean? Why is price failing to go higher? Why is markets rejecting? What does it mean about the sellers here? If you are a 1:2 type trader, then this is good for you. It's not for me. What I want price to do for the next week or two is to deal with the buyers and sellers of this level. Really have fun with them. Do whatever you want to do, until you get to a point where you're finally ready to come all the way down to me. What does this mean? It doesn't mean I'm gonna be always right, but it does mean that if I do take the trade, I am at least taking a high probability setup. I can start to really look down on price. I can really start to zone in and go, all right, can I find an H4, H1, 15 minutes type order block in here? And what's my target? Let's say I want to target that same supply. Let's say this supply still hasn't been removed. Well, that gives me a close to 1:5. I'm risking, for every $1 I risk in my account, I'm making 5. That's a risk I'm willing to take. That makes more sense from the business outlook of price, but it also makes sense in terms of proper supply and demand. This demand is no longer fresh. Markets are using it as we speak, right? This demand is hella fresh. Nobody has come back to it. It's one of the much more better areas to wait for price. So AUDCAD, if we're buying, I'm buying up there. If you want to take a slightly higher risk sell, because overall markets want to go up, then you really want to polish your A game, right? So if you want to first sell this thing before it goes down, then I'd very much suggest you polish your A game. And let's see what we can find in the zones. The reason why I don't even want to be involved in sales is because I can already see they've laid the trap. I mean, what's this? I mean, what's all this nonsense here? All these weird patterns, right? I really just care about the bearish engulfing pattern, but I hate it that there'll be a beautiful order block, and just before it, there are these multiple levels here. So let's investigate them. For those of you who will be too bored, there are traders who get so bored, they need to trade something. They can't sit and wait. Most of the money is made in waiting. Why? Because you're not losing money. Yeah, not losing money is so much better than actively trading, right? So I'm just quickly scrolling the H4. Hey, there we go, right? So this is that H4, inside that H4 zone, for those of you who want to sell, and you see, those of you who want to sell, if you just sell on the yellow zone, the bearish engulfing pattern on the yellow zone, and then you get a liquidity rate, you'll be like, I didn't understand why. Well, that's because you didn't check, you didn't investigate why, you didn't see for yourself what was going on here. You see this there on the H4 time frame? You see how it's outside the daily time frame? You see how I said I don't like the stuff going on in there? You have to check these things for yourself. You have to get to a point in time where you see the stuff and you go, oh, I get it now. If markets are true, if what Leroy says about the banks is true, they always want to sell high, buy low, then why wouldn't they come sell up here? Is this area not fresh? Kind of looks fresh to me on the right. It looks here on the left. What's it reacting to? Right, markets broke through this. This closed higher, right? So if you see this there, this I hope you guys are following. I hope you guys are following right there. See that markets went above that point with this candlestick, right? And then if you do something like this, if you really want to give yourself a nice beautiful headache, right, then you've got a situation there on the H4 time frame where there's that whole supply where nobody got to, nobody has arrived at. It's hella fresh, right? And then you've got this supply that we just drew right now. So this is why I'm saying for sellers, just be mindful of these levels that exist and wait for you painfully. And you will have to dig and dig on the H1 time frame, 15 minutes time frame structure, right? But for me, I'm just happy that market stopped there on the daily time frame. I have no interest in taking sales. I can see a good sell setup working, but I can see it's going to take a lot of work. This sell here has no confluence on higher time frames, right? It's a continuous daily block, but this first sell here is where the liquidity hunt is going to stop. Right, it's very much linked to this cluster here, so just be mindful of that, right? Sellers, you know, I would wait for markets to go all the way up in there, and you want it to be part of the same market phase, right? So you want something like this to happen, bam, and then this to happen, right? And then you can start to really adjust and take your levels. But for me as a buyer, I would love to wait for price to come there, and some of that waiting, guys, takes forever. But it's worth it. It's worth it because then after a month, you can go back and say, look, I showed up here every Sunday, and for the last 4 rooms, 58, 59, and 60, etc., only one trade was a loss because we waited. Some are not yet triggered, but all the rest are triggered. And there's going to be a video, like I said, breaking that down. CAD JPY in profits, Euro pound swing in profits, Euro Swiss franc 1:4 in profits, DXY was in profits, USD CAD 1:9 in profits, USD Swiss franc 1:2 in profits, Euro CAD. I've got this down. I'm going to do the video straight after this, but this is our swing trades. Pound JPY 1.7 close and in profits, right? These were signals given in March that are doing very well, but this is the process. You got to build it, right? You don't know when the other ones will be triggered, but you got to keep building this stuff. You got to keep building your account up, right? Next trade idea. We are moving slowly today, slowly, because I'm teaching so much. Right. So we've looked at gold quite a lot, guys. Let's take a gold break. Silver. Oh yeah, okay, fine. In silver. Silver is boring because we've already looked at this in a war room, and I'm still holding. I'm still holding. All right, silver. So I mean, okay, let's analyze silver and see if there are any new opportunities for interest for those of you who are not in yet. All right, so we expect silver, palladium, platinum to do well when gold is doing well. When gold starts to fall, we expect these things to follow suit. Gold is the mother of minerals, right? So we had this little thing that I told you guys about last time, the stupid consolidation. By the way, gold had the longest consolidation also on the weekly outside, supply. We marked out the area of competition just in case. I missed this sale, and finally got into this one. Right, so it's nice to see this. I don't think it's gonna go anywhere. I honestly don't think it's like going far. It's like a long-term 3-week, 4-week swing trade sale. I think I'm about to strike out. I know for a fact that I've already broken even. Right. Sorry about that. I know for a fact I've already broken even on this particular trade, and the reason for that is I'm just not that confident in how far price goes. Right, on Friday I was happy to see a bearish engulfing pattern, reacting to a bearish engulfing pattern after the retest. That's always a good sign for a little bit more room to the downside, although this week might be a week of retesting. Then when I go to the daily time frame, not impressed at all. Right, the lack of clarity, lack of clean order blocks. Some supplies and all supplies and demands are equal, as you would know in module 1. But in module 2, we then say all supplies and demands are equal, but some supplies and demands are more equal than others, which was pretty much a quote from the Animal Farm. And I said that to say I don't see those more equal supplies on this chart to let me know that a continued sell pattern is going to happen. I like this PCP, but it's only because I'm already in the trade, right? It's not a PCP I would take if I was trying to get in. It's a PCP that I'm hoping will work to further push price into my direction, right? And Kakini Hashi, by the way, is how I got the order block. I've marked it in red because I don't want to buy from there. I don't trust it yet. And I think, you know, after this particular trade, it's gonna take me a little bit of time to really, you know, come back full on into the silver market, right? My thing is I really want to buy silver, but I really would like silver to go down, like to really leave this area, like to really break out of this, like, and really trade low. And that's the reason why we kept talking about a sell when we kept talking about silver a long time ago. Is all of these sells I thought by now would have brought us all the way down here, right? And I know a lot of people think I'm crazy calling for $18-17 on silver, right? But like I said, if the war comes to an end and all these negotiations happen, then what do we need it for, right? Well, I mean, it's safe haven flows are no longer needed, right? As when these assets create new major turning points like gold. Gold made a new major turning point and now it's cooling. It's broken its all-time highs once again. Now it's going down again. It did the same thing in COVID in 2020 when we needed it. It made a new all-time high in 2020 and then it went down for 2 years, right? So like, what do we need, expensive minerals for right now, right? So all the sells that I've been trying to take on silver, at the end of the day, honestly, I'm hoping to hold all the way down here. I don't think I'll get a chance to, but I'll be watching this level. If I see that markets are not reacting, you know, kindly around this area, which is not really well drawn, then I might start to lock some profits just above the zone here. If this goes well and markets go all the way down there, then I'm still going to lock profits just above the zone, hoping for, you know, a further dip to the downside, right? So silver, unfortunately, I honestly cannot see an area that I would be absolutely comfortable to say, you know, re-enter, you know, or take a risk to trade, except for pointing out the fact that this here is high risks, right? This is very risky. You know, but each to their own. Number one. Number two, I think you'll need a confirmation tool to take this trade, right? So you've got a swing high here, all right, and you'll need a swing low somewhere there. And then when you get a swing high, swing low, I'm not saying that's where the swing low is going to be. You're gonna have to wait for it to actually happen. But in case I'm not with you, or I'm not analyzing this chart, then you can start drawing a drop down Fibonacci. Let's just say that's where the swing low was, you know, and then you know, swing high marked out properly. All right, this chart is starting to dance quite a little bit, right? So somewhere there, right? And then really all you're looking for is that golden ratio area confirmation, and you can see it's somewhere within, right? So I can see there's just too much color. I apologize. Let's delete some things, right? So remove my risk reward ratio thing, right? So this is what I'm saying. So like, you know, you want something like Fibonacci to kind of like confirm that maybe, just maybe somewhere in here, you could get some sell on action, right? And, you know, it's not the best order block confirmation. It is just, you know, one of those PCP-ish levels. It's not a clean pick supply. Remember, we need a rally-based drop, rally-based drop for some good supplies. Rally equals dump money into a zone. Base equals, and you want the base very short, and then you want the drop, you know, to give you what we call our imbalance, a clean imbalance, showing you high volume, like really, you know, mechanical volume, right? So that's silver, guys. If you're not in it, you know, I don't know if it's a good idea to take a risk into that market right now. Next chart, NZDCAD. Okay, I remember this one at least. Right, so let's start from the bottom. So I explained to you how we got to this conclusion and what is going to happen next on NZDCAD. Right, so NZDCAD, like I said, you know, all things CAD has just been interesting to watch, right? Fundamentally, is a buy profile asset. You can see this for yourself, right? There's you know, from the beginning of time, this is one of the things that goes up during the financial crisis in 2008. You know, while the whole markets were falling, this thing was doing extremely well. You come here, COVID 2020, markets were doing extremely well during the markets crash for COVID, and that's just how it is. And all of a sudden, when there's no need for this thing to do well, or if markets are cool, so you need to understand your asset classes basically, right? So markets have kind of like returned back to the exact same place, 2nd of March level, right, on all these risk sensitive charts, and then started to demand out as in reacting to some strong buying levels and starting to push to the upside, right? And our first possible area of concern was this massive cluster here. Just want to show it to you. All right, so obviously in front of you is basically a final multiple time frame analysis version where I'm just pointing out the entry. Especially, I do this if I'm by myself, but if I was with you, I'd have shown you the governing supply, the weekly supply, the daily supply, and all the confluence. But if you just look for yourself on the monthly time frame, once again, you've got a massive bearish engulfing pattern right there. And what I'm looking for is the highest supply inside the bearish engulfing pattern. So for that, I do top-down analysis, and that's how we got to that. So this is on the weekly time frame, right? Very clean, very nice. And then on the daily time frame, we got the triggered here right there on the 7th of March. And yeah, this has not been one of the nicer drops in the markets in a very long time. You can go at Kinihashi to get confirmation if you want to see it. There was the doji candle. Markets didn't even go that deep, right? So that's why the first time I was in it, or as early as I was in it, I actually thought this was going to do a deep retest here. So I automatically, had a second sell stop just so for full transparency. I know I have a sell limit somewhere in that zone, but markets didn't even come back up to trigger it, right? Markets did nothing of that sort. And so markets have slowly now started to create lower lows, which is kind of like what we want to keep out for. It's what we want to see, right? But just remember that, this is a very good place for price to turn against you. And that's why I'll most likely be exiting, somewhere there. Markets have already returned once or twice. So what I did was I just broke even where markets were returning in here, and then I had a second sell limit there, but price never triggered that. And now it's just a wait and see game, right? Preferably, I'd like for markets to start to remove this level. And if it does, then we can really have all our TPs met somewhere there. Or at least that's where mine is roughly, right? So that's a very good daily demand that I am holding my thumbs for. It's fresh, unbothered, and that'll be a very good risk reward ratio. If you're not yet in this trade, NZDCAD, where can you get in would be the question. And right now the answer is we might need to wait. We might need to get some market clarity. I personally would like to have a second entry in since my second sell limit was not triggered. I definitely am going to leave it there because I know that markets have every right to still go back up before coming down. Markets don't owe me anything. They don't owe me profit. So markets today, this week could do this just before coming back down. I hope that's not the case. But if that's the case, then that's something that could benefit everyone else who's waiting to get in, right? But on the H4 time frame, keeping my candlesticks and my chart as clean as possible, it's not very hard to see. Complicated 365 candles right at the top there. Hakini-Hashi pattern. Let's go to normal candlesticks. Right, that's a clean area of competition, right? So I missed this one, but if you know what you're doing, that could have been nice to take. Remember, your area of competition is always slightly outside your zone, just like how you don't put your stop loss on top of your distal line. These are called proximal line, your entry point. Distal line is your stop loss zone, right? It'll just be 1 or 2 or 3 pips outside. There's a good reason for that. Allow price to breathe just a little bit, right? So markets have done something of that sort on the H4 time frame, coming back to a turning point. This is also sometimes quite encouraging when you see stuff like this, where markets close here and then markets also closed a little bit lower there, right? So there was a low and then a lower low. And really, honestly speaking, I don't care about swing highs and swing lows, but if there was going to be any real buying in the markets, it will most likely happen there. All right, so NZDCAD, if things go my way, I'm hoping to hold price until it gets down there, through the ups and downs. And if things don't go my way, I've already protected my first position by breaking even. This would be very nice as well. Some type of re-triggering of entry, but not before markets get down there. So while markets are somewhere here, right? If markets were to do that, then I could lock some profits or get out and then hope to re-enter price there, up there. So yeah, trader's choice. Watch out for all the things I've highlighted on this particular chart, right? But this is a clean imbalance. This is kind of like a good place to not be holding sells. This is a very good place, this green zone here, not to be holding sell positions. So just be very mindful of that. That's NZDCAD, right? USD, China yuan. Let's go all the way up. All right, so we don't need this zone anymore. You can see how long it's been since I've been on this chart. Right, so let's see. So most of our analysis, God knows when we did it, is still intact, man. It's impeccable. Supply and demand is actually impeccable. Right, so on the governing time frame, we've got a situation, right? Markets have breached a trend line, right? And then diving a little bit deeper into a demand level, which is always indicate an indicator of just being very careful of watching the flow of money. It's been steady selling, man, since about June 2020, non-stop steady selling, right? As price just kept dropping and dropping and dropping and dropping and dropping. Which is kind of like something to just be mindful of, right? You're mindful of what Ray said about the changing world order. I think he was very, 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 very clear about who he thinks is going to benefit at the end of the day. And look at this kind of like drastic fall and the opportunities that wait, for a lot of people out there. Right now, I've got this interesting take on this particular pair. If you do any buying here, you're screwed. That's my humble opinion. But it also depends on how far or your buys are, right? If I look at this chart carefully, minus all the lines on the smaller time frames, this is definitely something that cannot be ignored. We'll figure out what all these other lines on the smaller time frames mean, but this right here in front of us definitely cannot be ignored. Right, markets, supply, not good distance to the demand. Markets come back, touch, go, bearish engulfing pattern inside a demand, but markets do seemingly move slightly above it. So, let's call this negated or removed or whatever. Let's tighten our setup there. That's much more realistic and better. Right, so markets are leaving a demand, but on the other side of a trend line, and there's a potential good trend line touch there as this demand pushes price back up, right? So maybe there's a little bit of buying room, but it could be very short term. This is how price closed this week. Right? Yeah. Right, let's see at the top there. Right, so markets do enter into a governing supply. This is from the monthly supply, but on the weekly supply, we have, these levels. We've got this new one here where price comes back and reacts to, and then that's what causes this incredible drop. But also got a clean peak right at the top. So now, instead of drawing a new one, I'm just going to draw this inside so we know this. And I'm going to draw the area of competition as well so we know it. Right, so we've got something along those lines there inside the supply. And then we've got this situation here. This is weird, like almost a bearish engulfing, but kind of like feels like not really. The open of the green candle, the close of the red candle are fairly equal, right? It's just not how I like my setups, right? And I've got something going on in these green lines, probably on the daily time frame. Let's have a look. Yeah, there we go. Got a nice clean base drop situation, right? Consolidation to the area, blah blah blah, break of market structure, and markets fall, right? So markets are seemingly trying to return to this level right now. And remember, I personally, I don't know what you like to do, but I like to trade in line with the governor. So because the governor sets my trends as a supply and demand trader. So I never want to do something that contradicts the governor, right? And then because I'll just be those people who are angry, that they lost money but don't understand why. If you go against the governor, which is the trend is your friend, you will get derailed in the markets, right? So the trend right now is pushing price up from this governing demand here, but on its way up. Okay, yeah, on its way up, markets have just been interesting, right? But on the daily time frame, we've got a bullish engulfing pattern, and that's how our price closed on Friday. We know that these patterns are not random. Number one. Number two, we know that they need to get tested, and getting that tested is the key, right? Because inside a strong bullish engulfing pattern, a retest of it will always provide you with some type of entry. What is going on now? All right, whatever. Right, so somewhere in here is a potential play. Let's go H4. Right on the H4 time frame, and then I'll do something like this. Sorry guys, I just want to remove this thing. There we go. And then redraw it. Right, so on I have to redraw it from the daily. I apologize. Right. I've got some chart OCD, man. Some chart hygiene is important. Right, so drawing my area of value correctly, understanding where my area of competition is, how long or how big it is very important, so that when I do some top-down analysis, I see what's coming. Right, so, this is what happened on H4. There was just a basic tennis match between supply and demand. Supply has pushed price back down. Markets are moving back to an H4 demand. Markets very much struggle with that reality and to create an bearish engulfing pattern. This area, this white line here, is very important for price, right? That's really where you can get, like on Monday in the open, Monday and Tuesday, you can get a candlestick that'll do something like this, and then you'll get like a little wick that'll sit on top of this white line, right? And that's basically a confirmation, right? That's like a test of that zone, like a retest of that particular order block, in case you didn't know. But yeah, on the H4 time frame, I still wouldn't really trade it like that, unless if I was taking the trade off the daily. And if I was taking the trade off the daily, my stop loss is all the way down here, so it wouldn't matter to me as long as the risk to reward on the swing made sense, right? But if it doesn't, then on the H4 time frame, you're almost left with one option and one option only, which is to wait. And I can already see markets have already been there. Markets have already been right here, right? How do I know? Look at this wick here on the third green candle, dug very deep into that zone. Let's go Akinhashi. All right, then let's adjust the zone. Right, so for better risk to reward, daily stop loss remains H4 entry, something like that, and that actually allows markets to come very deep for you, right? But you can see you already got a very clean anti-fib level to kind of like contest with, and really if price actually wants to come that low to you, right? So you could have a very low risk small lot size entry there, and then you can have a better lot size trade here, which is closer to your stop loss, and then obviously watch out for these big targets there, right? EURNZD. I'm out of juice, my people. Right, so clean, man, beautiful. EURNZD. Those EURNZD, Euro AUD, EuroCAD. I couldn't close these swing trades from the first financial quarter and take profits because there's still so much. I couldn't add this, into a book. So, or those of you who read our quarter-to-quarter report, there's just so much here. So much potential to more downside. So, like I said, EURNZD, look at Euro AUD. Could be wrong, but I think it's Euro AUD. Yep, same. So much to the downside. So, and I don't know if EuroCAD is also the third one, but I know I've got like these very big 2 or 3 swings that I definitely want to hold on to, right? Beautiful. And by the way, all these trades, I did them with you in the war room, right? So Euro NZD is just one of those that we haven't done in a long time, but still very weak, still bleeding. I've covered my Euro thesis over and over and above. And now, let's see if we can find some new entries. Right, so PCPs and all that kind of stuff happening right now here. We actually marked out where we want price to come back. We actually marked, yeah, there we go. This is all marked out for you already. For those of you who are not in, where you'd wait, right? So this is what seemingly happened with price. And I guess, I used to teach people really focus very hard on immediate areas of value, and then now I'm always talking about cowboy levels, right? So you kind of like have to balance me out. I've become more protective over the years of capital, but some of these risks are simply worth taking. But I wouldn't have taken a sell here personally. I wouldn't, but it's kind of like exactly what markets wanted. As you can see for yourself, you draw the wick there of that previous candle, right? You get a clean area of competition. You can see that's exactly what price was gunning for, right? I don't know if you'd have been filled. I wouldn't even have bothered trying to take this trade personally, right? But in terms of, does it work? Is it a module 1? Are the rules made? Beautiful imbalance. Everything is right there, right? So markets reacted to that about Tuesday, Wednesday last week, and markets are trying to fall. Right, so I want nothing to do with this level, right? So the next time I'm adding to this position is if I would love markets to come back here. I really would. If markets could just do a counter trend and then we drop again properly, that would be amazing. Because remember, that's just how structure moves. Remember, structure needs to create. If you got a high here, you gotta create the next lower high. And it takes time to do that, but that's really the way I want to be in. That supply is in confluence with governor weekly daily supply, right? So EURNZD, I'm going to wait there. There's nothing more to say about this chart. It's beautiful, it's simple, it's clean, pound NZD next. Right, I'm still waiting. That there was a lot of fracas somewhere in here. And remember, this was that unfortunate trade where we did take profit somewhere in that big mess, but we took profit too early. Short-term trade. Well, it wasn't even short-term, by the way. It was good term, but we took profit early, and then I missed all of this. Man, sometimes yeah. So you move on. Make sure you teach yourself, it wasn't for you. You don't want to get bogged down on trades you missed. But goodness gracious, right? If I was in that long with Euro NZD, pound NZD should have also been an obvious example to kind of like get in that long, right? But right now I'm stuck waiting for a retest, a fresh touch actually of a zone, right? So not much there, but you saw Euro NZD did this. You guys saw this for yourselves, or that's where it is right now. Not classic cowboy trade, and then it's starting to drop. So you use that. Some assets are primary movers. They move first. Because they are moving first, they can indicate which other assets are gonna go. And then I taught you guys this in the previous war rooms. All you have to do is come to my FX book and you go to market correlation and you see for yourself, is there an 80% and above correlation between Euro NZD, which has shown me the path. Why does it show me the path? Because it's moved first. It took a supply and demand number 5, basic cowboy turning point, and turned. Like Leroy is waiting here, but that doesn't matter because Leroy got in early. I might not be in with Leroy, but can I make a little bit of money on this drop? And if the answer is yes on Euro NZD and it didn't work, can the same happen to pound NZD? Like, so let's quickly find Euro NZD. There we go, Euro NZD. Just click on it, and it's just going to give you a list, absolute correlations, negative correlations. You want to risk your odds. What are my odds? Look at this. Top, listen to me. Top absolute correlation. The absolute highest correlation, Euro NZD moves 99.2% like Euro AUD, but Euro NZD also moves 98% in absolute correlation with pound NZD. So now I go primary markets. Who moved first? Okay, you did something like this here, you came here and then you drop. So I see during the week how far the drop goes. Then I go, well, if this is correct and there's a 98% correlation, nothing is 100% in trading, but my goodness, doesn't that put the odds in your favor? Doesn't that give you a high probability trade setup? Then you're like, I just simply need to look for something similar on this chart, something similar. The drop has been similar. I know I covered all of this for those of you who attend the London sessions in the morning where I actually did this before, but I've done it many times on the channel, right? Then you want to make your chart a little bit pretty. You're like, okay, I see, right? There's a 98% chance. Listen to this. Some of you guys make, you get involved in activities that make people, right? Making people activities, right? You have sex, right? And some of you proudly have sex because you're using a condom, right? And you tell yourself what you're going to tell yourself about the condoms. I'm not here to talk about that stuff, but I'm simply saying a condom is a 99% blah, blah, blah. Well, apparently there's a 99% for that other stuff. Here, there's a 98% of absolute correlation with these two charts. It's simple. And then you take the trade if it's in line with your risk assessment. If your probability is good for this, then there you go. There's a high chance that during the week, in the next few days, you might see a climb, you might see a reaction to this, and my price goes down. And you want to keep EURNZD mirrored. You want to keep seeing, okay, so that how far did the trade go? Because remember, EURNZD is already ahead. It's already paving the way for you, right? It's already kind of like gotten to this stage of the market where it's then reacted up, hit a wick, and then now it's trading down below. So you've got enough time to watch and see how this story ends. For example, this might not be a sell that you want to take like Leroy, because markets might all of a sudden by Wednesday break here. Then you already know your setup in pound NZD isn't going to work too. Then you should probably go look for a better high selling zone, like what Leroy is doing. It's a cowboy trade and it worked. You'll be like, but Leroy, it worked like for those people. But yeah, it just because price reacts correctly there, and that's good for you if it works. My question is always deeper. I don't have a problem figuring out where price is going, but I want to make long-term money. I make long-term money by not being right all the time, because you can't be right all the time. You make long-term money in trading by taking high probability, risk-appropriate trades. So that on the days that I'm wrong, which is my 1, on the day that I'm right, which is like my 1:3, my 3 covers all my wrong days. And so for this trade to be right, for me to take this trade, I need a take profit target minimum that is somewhere all the way down there. Minimum. I need a profit take target minimum that is somewhere down there. And because down here on the daily time frame, I don't seem to see a demand, at least not there, I already know I'm in trouble. All right, so this is where my minimum is. You see it right there on the left? We can work with that, right? This kind of traces on the other side of a trend line. It's too late for it, right? But that's what markets were trying to come back to here. Oh my goodness. You see this long wick trying to make its way to my white lines? Look left, look left, look left. So on minimum, for me to even take that trade, right? I know markets related to a supply. I'm not impressed with that stuff anymore. I know my supplies and demands work. What impresses me is how do I actually make money from it? What's going on? Where are the candlesticks? Are they still? Oh, sorry. Stop too soon, right? So this is where markets were trying to get to the first time. And if I take the sell there, if I had taken that sell, then I would have to hold that trade until all of this level, a minimum of this level, is made for me, because that's at least kind of clean. But look at this area, man. It's so dirty. This is dirty money, man. Like, you know, when markets, I like my areas of value fresh, right? So there, so I've located where price was trying to come all the way down to, and markets didn't even make it. But if I'm taking a risk here, minimum 1:3 means I'm holding there. Some of you guys are 1:2 traders, right? And if that works for you, that works for you. I know statistically speaking, a minimum of 1:3 in a long, for someone who's really trading for a living, right? You can't have one good trade and then throw a party and go to social media. You have to have consistency. You have to withdraw. You have to pay bills and still have enough capital to trade on. For someone who's trying to build a financial system like that you can live on, which means pay for your life or having capital to pay for your trades and take risk. I can't take a trade like this unless this trade is going to give me 1:3. It definitely could give us 1:1.5, because if we really look at this turning point here, right there, right, bullish engulfing pattern, right? Then that's kind of like 1:1:6. Like, I'm not going to risk $1 just to make $1.60 in the markets, right? It makes no sense. If I'm wrong 10 times, I've lost $16. I've got beautiful videos on our YouTube channel on risk management part 1 and part 2. Go find them. I'll put a link in the description below for those videos. It's not just videos. Those were actual me in class with registered students. It was a proper class where I gave them everything, and then we shared that for trading challenges. So I'm making a note inside the description. I'm gonna put the 2 links to risk management videos, part 1 and part 2. They're hella long, and that's it. There's nothing more. They're not gonna be short, because it's not a 2-day, it's not a 2-minute process, right? So just be careful of that. So you know there's a correlation here, so you just watch this chart. Watch this chart. It's moving first. You only need data for 2 days. You only need Monday. Well, markets open here on Monday. If yes, and there's a demand, then you know the sell is done. And then Tuesday and Wednesday, and then boom, they take out the supply. By the time markets are doing that on pound NZD, you better be ready to move, because remember there's a 98% correlation in this particular market. So when markets do that, look carefully, man. I mean, guys, markets, I love language. Look what's going on here on pound NZD. It's got a bullish engulfing pattern just sitting there, and markets are preparing to move. There's a 98% correlation, right? So I'm not going to repeat myself. I'm not selling here, but if you see an opportunity and you want to take it wisely. But that's not my trade idea. My trade idea is to sell a little bit high here on pound ZNZD and sell a little bit higher there on EURNZD. All right, so risk management videos are going to be in the description. In the description below, this discount link for all of the stuff for you to understand how my mind works, so you to get to trading stuff. That's module 1, which is the basics of supply and demand, all the rules, all the different types of supply and demand. Module 2 then speaks about my trader's edge. How then do I compete in this world of supply and demand? Which patterns do I look for? How do I look for them? How do I use specific tools that could help me confirm my areas of value, like supply and demand curve, fib? How do you draw it? 50% body candles. How do those work? How to properly trade company indices with supply and demand. It's like a whole thing. And then module 3, like I said, by the 9th of April, we're closing that special intraday trading mastery, right? A lot of people struggle with intraday trading. It took me almost 2 years just to back test supply and demand and all that stuff. Market phases, zero-sum game, liquidity hunts, lower time frame, week of analysis. Everything is in there, sequence nested. How to make a trading sheet, like Excel spreadsheets, not the complicated stuff, but how to bring it all together with COT data. Like, these lectures are ready for you, but you have to be ready to learn. That's all. So I'll put the link down below. 75% off. So instead of $400 US, it's $100 US per module. It's always been like that. Just that no one has ever paid all that type of money. There's always some type of discount running. That's it for this year. This year, because it's our birthday, right? Remember, we turned March, we celebrated an anniversary is 365. So all 4 modules for $100 US. It's for you. If it's not for you, it's okay. It's okay. If you want to learn, it's fine. Right. So let's move on. USD Hungarian front. We're almost at the end of the road. I like doing these war rooms in the morning, and then I can just pre-record them and upload them for you guys at 4:30. Sometimes I'll have to show up live. I've been doing them live all year. This is actually my first pre-recording, at least on a Sunday, and that's because I want to take a nice long walk with my partner. I feel like we spend so much time together, but we don't. This week, the last 2 weeks, I've been so busy putting together this course that I miss talking to her deeply, and the kids are everywhere, and so like I've been busy for 2 weeks. So I just want to take the time tonight to spend as much time with her as possible, reconnect, make sure we're on the same page, check on her stuff, how her work stuff is going, and listen to her complain about so and so, and we need to fire so and so. Love you, babe. Right, so let's go. Yeah, the dollar Hungarian franc, right? So we've got this situation here. Right, markets reacting to this in May, June, July. Markets going up. Markets made a new all-time high. Right, so now this is where you want module 1, lecture 1, 2, 3, 4. Because remember, when you get an all-time high, it's not just an all-time high. Colleagues, there are 5 types of supply and demand in module 1. Major turning points are supply and demand number 1. When you see it, you need to understand it. You need to factor it in against a couple of things. Your profile of your asset, market profiling of the asset. What's going on here? This is a buy profile asset, right? The dollar is just punishing Hungarian franc and has been from the beginning of time. Probably won't change. And if it does change, that would be a nice shock. You can draw some trend lines into it. You can really figure out a couple of things. But for the most part, what I am interested in is always kind of locating where are my key areas. Specifically by key, I'm talking about my governing supplies and demands, and specifically I'm talking about my immediate areas of value. When I locate my immediate areas of value, these are red for now just because I'm lazy to change color, not because they are cowboy zones, right? If it's a cowboy zone, I'll make sure I specifically tell you, right? So I want to know where it is, right? So these all the red zones that I've drawn are great, but they're far away. So what happened is markets took out a previous major turning point that was made in March of 2020. So when COVID happened, or COVID started, right? You can see here there was a sink in this currency pair all the way to for like a year. Then markets have slowly surely recovered, breaking an all-time high, cleaning out any supplies, liquidating, whatever you want to tell yourself. Point is, there's a new all-time high. New all-time high is over there, and an all-time high is never just that. In 2 to 3 months from now, we're going to come back and probably find a valid supply or market inefficiencies filled. And what that means is a strong candlestick filling all of this, a green candlestick push to the upside. And we kind of like need to discover that. We do know that on a grander scale, we've got a very much more reliable order block that needs to be tested. And we know that we're about to start a new month. I would not be surprised if the month of April gives us, even if it's a green candle, but wicks into this zone. Why? Because you got to test that bullish engulfing pattern. And that's the trade idea that I want to take. So this chart is already marked up, by the way, because I looked at USD, all the USD pairs on Wednesday when I was creating a new video for module 3. So I did break this stuff down. So you can see our regular trade idea marked out here, but let me break it down with you. Weekly time frame, we're falling. We've got a new PCP, not a PCP, sorry, a supply level there potentially, right? And then on the daily time frame, let me just do this. Let's see what's going on in the daily time frame. Hope this has been good, guys. We're almost an hour in, almost an hour, 30 minutes. If you're still here, that means you're potentially enjoying it, potentially learning something, potentially interested in why on earth we did war room on March and we only got one trade wrong out of all those assets. Then you potentially like what I'm doing. So please like the video, potentially. If you're one of those people who are not subscribed, about 33% of people watching my channel are not subscribed, please do subscribe. It really helps the algorithm, number one. Number two, it motivates the living daylights out of me. I sit down and think what more I can do for the channel, how else I can help, how else I can contribute, because my understanding is there's an active community that is interested in what I have to say, and you know, I really don't mind providing insights, at least according to me at my level of understanding, which is not the best in the world, but if you feel like you can learn something from the channel, then definitely subscribe, definitely like the videos, but take it one step further. The rule of many is there's probably someone in your life who knows you and might be interested in what you're doing. So do share. That helps a lot, right? So on the daily time frame, I've got all these zones marked out here. I could tighten it, but I'm going to leave this one the way it is. And I hate this. Well, I don't hate it. Rather, let me fix that. This is just something that traders need to understand, right? If you've got two supplies in your smart money and your job is to fill orders, you understand what this looks like, right? If you guys get flow trading, right? You understand the job, like what I used to do as a flow trader, what flow traders do, like in the New York Stock Exchange, Joburg Stock Exchange, whichever stock exchange, right? If you've got a situation like this on the charts, you always need to ask yourself, what does this look like for the people filling orders? And if I can get my whiteboard to open in the background, that would be actually fantastic. And then I can quickly lament this situation and just make it simple and clean. But I really hope this point. I'm gonna bring it up right now. Just give me 2 seconds. Just give me 2 seconds. Just give me 2 seconds. Give me 2 seconds. There we go. Found my electronic whiteboard. Right. So in front of you should be a whiteboard. Right. You know what's always scary about doing this video is pre-recorded. It's like I love doing a sound check. So if you imagine being 1 hour, 40 minutes into this live and there is no sound. Just imagine. Just imagine. Right. You guys understand, right? So this is on the floor. This is all there is. This is all what my life was. It was a bunch of pieces of paper. And because I had OCD and I was organized, I would get to Alan Gray. I don't know if you guys know Alan Gray as a company, but anyways, I'd get there anytime between about 6:30 a.m. every day till about 6:45 a.m. And I was attached to a currency trader. Actually, there were 3 of them. So I was one of their financial analysts. I was a researcher, right, for the first year and a half. Then I moved to do flow trading stuff. And they would ask me tough questions like, what's going on in this and this and this and this in preparation for the 9 a.m. open of the London session. So I always had to create a 2-page executive report of how markets close today, how markets open, and the flows. But as a company, because remember the company is executing orders on behalf of other companies. I hope you understand that, right? I would stack up the orders, okay? And this is what it looked like. This is what it always looked like. Eventually, here there'll be in this case, because the chart we're looking at right now is a USD Hungarian franc. It looks like there's some daily supply. So let's call this stack. So this will be sell orders. It'll put 88,000. I don't know. Let's make it $80 just to make the number small, right? But these orders would be specifically at a certain level. So let's call this level 1,50, right? So a couple of people want to sell 1,50, which is fine. And then there'll be buy orders, right? Everybody's always going to be someone who wants to buy, and it will look like this. Now, if you really understand the spectrum of supply and demand, it means there's always going to be more stacks on the extremes. Do you understand that? So there's going to be retail traders who are willing to buy this thing at $50, but then they're going to be smarter traders who want to buy it at $40. There's going to be naturally institutions who are definitely going to want to buy this thing at $10. Why they want to buy low? And you know it's institutions because the most of the money will always be stacked on the low side of the buy. This is supposed to be vice versa. I should have had buys on my left, sells on my right, but it's too late. And then the sell orders will be similar like this. There'll be someone willing to sell. And now, I've made that already, unfortunately, 800. So just ignore that. Let's make that 80. There'll always be someone as well in the markets all the time, retail traders willing to sell at 50 sell orders here and willing to sell at 1,4. Right? And there'll be someone willing to sell 1,5. And on your charts, that's exactly what you have right now with US dollar Hungarian franc. You've got a bearish engulfing candle that looks something like this, right? You forgive my artistry. And this, what's going on? There we go. Right. And this is your first supply. And you've drawn a supply. And this is your higher supply. This is your supply at 1,500. Do you understand what I'm saying? As a floor trader, I'm looking at the stack here. This is where most of the money is. And then just in case we want someone, someone is also watching this lower supply that we just saw right now. And that's the supply at 1,40, right? And I won't even focus on the buyers because there's not enough room on my whiteboard. But, perchance there are going to be some buyers who are going to help us make money today. They're going to push the markets up, right? Now, if I know this, that, there are some orders for 1.4, but there are also orders for 1.5, and most of the money is all the way here at 1.5, right, which is the side. then all you are going to see on your chart 9 out of 10 times, all you are going to see on your chart is this and this being combined. 50 plus 40, what's that, ladies and gentlemen? That's 90, right? So that it's more than the 50 sell orders in here. Hello, right? Simple. And then markets liquidating all the stop losses in here to do what? To make contact with the true supply, which is why we simply tell you sell high. This is it. This is the logic behind that. So markets get to this. It's because they combine some buy. Maybe they also buy. Maybe they use some type of conviction to buy. Maybe there's a lot of buyers in that market. Sure. They definitely trap anyone trying to sell a little bit lower here. There's 1.4 level and come there. Because of that, when I see charts that look like this, I'd be like, okay, cool, great. I'm going to go Akinahashi just to see a couple of things. All right, fantastic. Same thing. Brilliant. And all I'm going to do is to say, dear cowboys, I'm not your financial advisor. You can do whatever you want to do with your account. I just want to warn you that this area could work. There's a 50% chance it could work. But in the event it doesn't work, don't be surprised. Why? There is a higher supply. And then I'm going to go H4, because remember, I'm swinging. So I really don't want to go too deep. And I'm going to be like, wow, that's nice and tight. This sell zone is confirmed with the daily zone, right? And then that's going to make a lot of sense for me. I'm going to go back to daily, show you what that looks like. And then as a trader, I have two options. One, you can go very small lot size here, or you can go big lot size. You know, maybe it's your lucky day. Right, and markets actually could work there. I'm just simply saying you don't have access to flow trade. You don't know what they're thinking, right? But in my experience, most of the time, this is what happens, right? In my experience, the supply in the way of a higher supply gets taken out, in my experience. And so for me, I'd rather wait there than wait there. Simple. Or let me just do this so that we're reviewing it, right? And then, you know, trader's choice, right? But I hope that helped. You know, a little short perspective into what's going on, right? Flow traders back then actually didn't even care about digital charting, right? So we never use trading. You didn't have time to go through trade, bro. Like phones are always ringing. It's actually madness. It's actually not like a nice job, you know. It's great if you love the markets, but it's not a nice job. This was so beautiful, man. This was so clean, right? Multiple time frame analysis, you identify your governor, you got a good imbalance, and markets just come back and markets fall. Simple. How is smart money concept failing you? Man, there's something you haven't gotten this part right, the smart part. Not that you're not smart, but you haven't figured out what the smart part is. I'm thoroughly shocked, right? So anyways, weekly time frame, and actually should make a note to take profits on 2 trades and then break even on the 3rd one, and then see how far we go. But it's simple, guys. There was a governing supply in here, as we said many weeks ago. Remember, we spoke about the Swedish. It's on the videos are on the channel. You just go to my channel and you just file search. That's all you have to do. File search. War room number will pop up, and you see. Then you scroll and find it for yourself, right? But anyways, we're with a clean marking here into the governing supply. Look at this, supply 1, supply 2. Which one is higher? Which one, where's price gonna go to? Yeah, it's gonna go to the highest supply. What I just taught you, that's exactly what happened in a different chart. Daily time frame, top down analysis, daily time frame now. Same situation to the left. If I can just quickly scroll. Right, so because I found the weekly, I'm gonna keep to that confluence. I found the weekly supply with whatever. I found the class and the daily. Anyways, we took the trade in there, and markets have been falling ever since. You know why I waited a little bit was it would be nice to see this area break there, but you know, yeah, I suspect, you know, remember we've been tracking the dollar for a very long time, so I do suspect something weird is about to happen with the dollar. The dollar is still struggling with the DXY supply. I'll have a look at that chart with you straight after this, so you can see what I mean. Right, but we've got a big supply there on the dollar currency, the dollar index DXY. So that's why I've been supplying, right? So the truth of the matter is, it'll be so nice. It'll be so nice if this was to work. But it's a cowboy area of value, so it's not my recommendation for you to sell from here. And if you do sell from here, you have a problem because the demand is there. But here's a bigger problem: you're selling on top of what we call a retest of a bullish engulfing pattern, which is generally a bullish sign. It's literally one of the thing that happens just before your supply block is taken out is what you're looking at right now, where markets create a bullish engulfing pattern, okay, number one, and then number two, make contact with it, test it, okay, and then number three, bounce off it, right, to the upside. So this area here for me is a little bit, highly contested. That's why, it's time for me to then move my stop loss here for one trade 3 break even all the way up there. And one of the take profits always 50% of the distance, so I should probably close that too. But the reality is, if this area gets mitigated, the truth of the matter is, if this thing wants to fall, which once again the governor would have told you that it wants to fall, which once again the governor is telling us it wants to fall, right? From a macro policy long-term perspective of supply and demand, this chart is coming all the way down there. So I don't want to lose my perfect entries, right? So I'm only breaking even on one trade, only one, and right, which is the long-term swing, because I've entered quite high up, right? And then trade idea number 3, yes, I want to break even there, but I'm going to change my mind right now with you. I'm actually going to lock profits here, which means you might be willing to take a risk on selling here. This is the closest daily supply to everything, to the weekly, to the governing supply. It's kind of like nested within. That's so I'd far much more rather protect my position there. But trade 1, I'm just, so once again, break even on trade 1, I want it to run forever. Trade number 2, I'm going to break even right there. Trade number 3, I should close because I've gone past 50% of the difference, so I at least make some money off this trade right now. I am worried about this demand. I am also worried about this demand level here, but for the most part, this trade could run, in the long haul all the way down. I hope that's clear, guys. I feel like I waffled a bit through this analysis, so I just want to be very clear. This is a good place to take a retest, number 1. All right, a good place to enter if you're not in it. All right, I will be locking to protect at least one of my entries just above here. I am closing one of my positions because I've run quite a bit and I want to match my equity or capital that I put into the trade, and then I want to see if the ones that I'll leave open run all the way down, but it's going to be a long journey. I don't recommend selling here. It's too close to this. This is looking like a bullish thing to go back up. If it does go back up, which is what some of you would be praying for because you want to get into this action, then that's kind of like what we're looking at. This is also a good place to take profit. So if I open another trade here, probably 2, 1 would definitely take profit there. And then the second one is, me, I'm going to try and run it for as long as I can, and then see what happens, right? So that's USD Swiss franc, Swedish krona. Just because we're talking about the dollar, so you see the dollar index. Remember, we look at this almost every Sunday, every day of the week, right? Blah blah blah, dollar this, dollar that, right? Beautiful uptrend, still kept in line. When we bought last year in June, finally took profits. Very, very beautiful supplies, clean demand, not a single demand failed from last year, June, July, up until this year, April. How is smart money concepts failing you, right? This is not you. You come here, come learn. I promise you, it's not failing you. I mean, I do this publicly every week. This is, man, whatever, right? So markets right now are sitting on top of a monthly supply, which I've covered many times, right? The dollar index is, this chart is a mess. I'm not even gonna bother, standing there, right? So, but I do think we're gonna break it. Remember, I've been telling you guys, Euro USD DXY, the concept is the same. It's the same thing I just drew for you on the whiteboard. Nothing's gonna change. If you wanna get to C and B is in the way and you're on A, the quickest way is to go through B, right? So this first supply price is going to go through and break to get to Donald Trump's supply. This is Donald Trump's supply when Donald Trump became president, and his supply was mitigated with COVID of March 2020, when all those risk-sensitive assets were going up, the dollar was falling in March 2020. Remember that, right? That's when gold was the safe haven of choice in March 2020. So the dollar tanked throughout that whole year. So now we're getting that repositioning of finances. It's quite a beautiful groove, right? So I'm going to go straight down to the daily time frame on the US dollar. We're outside knocking on heaven's door. Right, and all we just want to do is break this. That's all we want to do. Is all we want to do. Right. So interesting NFP readings, like we said, for the dollar, and very like an interesting reaction, to be honest with you, from indices, etc. You had a reddish moment there because once again NFP was negative, but for the most part, price first shot up. Indices bled through like I predicted. And now we were sitting with a dollar that's doing stuff like this. This is not a good place to ever buy again, by the way. But done. Yeah, there was a gap, which is a significant imbalance in supply and demand, but we're done. This is not a good buying place ever again, right? So if you want price to drop like me, you really want a much more deeper drop, right? So I haven't been able to, I've had these intraday trades inside this range with some of you guys, but I haven't been able to get back into a full-term dollar swing trade. Then that's fundamentally because markets haven't given me that opportunity. I definitely am not going to buy like a serious swing so close to a governing supply, but somewhere down here would be great. So I am looking out for these levels. In the short medium term, I'm looking out for these levels down here. Right, so that's USD, Swedish krona, and then I look at DXY. And the last currency asset for the day is the pound, pound SEK. And remember, straight after this, I really want to dig deep and prove to you and walk you through all the assets that went very well. Why we only had one losing trade in the whole month of March, right? What's going on here? Oh yeah. Oh, this is weird. This long wick that I highlighted here is, on Saxo does not make sense because I saw on capital.com it doesn't even show it. I remember this. They see capital.com, not there, right? So this is all we have on pound Swedish krona. USD Swedish krona going down, right? Pound going down as well, right? Similar. Right, and might as well. I'm not in this trade, unfortunately, although it was a beautiful sell trade to enter a long time ago. But I think there'll be a lot of opportunity for retests in the coming weeks. So this is really like a very good swing to wanna butter your bread with. The price is definitely going to come back in here. So all I want is a sell idea. Right, clean leave in the zone both on weekly and daily. Now it gets a little bit tricky because then we get our true supply inside the daily, inside the governor, inside the weekly, which is all the way at the top there, which will be the closest supply to any type of stop loss, right? This is exactly where you kind of like want to be, but markets have really moved, man. I'm gonna go at Kinihashi to see if there's a cheat code. Whew. It's like you wait for these type of setups all your life, and when they come, they leave without you, right? We've got a couple of breaks of market structure, complicated 365 candles, supply and demand number 3, sorry. Markets make contact, make touch, markets continue to drop, right? So honestly, this sucks. Filling up a gap, right? Had to be filled. Markets land there, gap up, therefore reaction to the upside into a supply. Markets then continue going down. This sucks. Yeah, man, this really sucks. I can tell you now, I'll definitely have a pending order here. I'm not confident that I'm gonna get triggered in time. And by in time is I want to get triggered here as long as markets haven't arrived at a governing demand. Because once markets arrive at a governing demand, then there's a market reversal and buyers are now in charge, and I should be buying with the banks not selling against them, right? So here's to me locking, crossing fingers and hoping that markets do make a strong rally to the upside before coming down. But then there will be other places to sell surely before, if markets don't make it all the way up there, which I understand, right? So let's see. I just don't like them, but then I know they're there. Right, so I'm gonna make all of them red, only because I don't like them, but I'm not saying they're not gonna work. That's one day, and that's definitely a fresh-ish area of value. All right, and then markets came in here. Markets reacted to that. I'm going to ignore that. Fresh engulfing pattern. Markets reacted to that recently. I'm going to ignore that. And then markets came back in here, trying to make kind of that turning point. And then markets gave us a beautiful imbalance, and markets did that. Right. So then the next one, which is even much more riskier, is this one. But it might be the last chance you get. I'm gonna go 2 hours. All right. Look at this chart. Look at this beautiful imbalance, right? And this is just where you kind of like have to think about the risk. Remember, if you take this sell here, you are consenting to the fact that you are aware of the fact that there is a higher sell area above. But look at how small it is. I mean, that's like what, 10 pips, 5 pips. What a perfect place to have a massive lot size and still be very risk appropriate, right? Very, very small zone, right? For small enough, right? Small enough, not that crazy zone to kind of like hold price, clean imbalance, etc., etc. Let's go at Kinihashi and see what that looks like, right? So you could have a very, very, very small, not small, but decent lot size and kind of like swallow both these areas, or you could take them individually, just knowing that what I've just taught you before is if there's a high chance that someone is going to push for a higher supply, they'll take it. I don't like the imbalance rule here, so I'm definitely going to try and take this trade. I'm happy to risk money here. Even if I lose, I'm happy to take a risk on the stock. Marked it yellow, right? And this is clean, man. It really I didn't bother so much to create strong demands along the way. So this could be a beautiful trade all the way back down there. That could be a very good trade. I mean, we haven't found a setup so perfect like this, throughout the whole thing. That's probably why it's not going to work. It's too perfect, right? But those of you who are swallowing both areas, just be aware of lot sizing, because it's almost 1:3, which is exactly what you want. But yeah, this is much more enticing. Goodness gracious, right? We're almost 1:13. And that's only based on the fact that this doesn't get in the way. You don't want this to get in the way. If you want to take this trade, you can also take that trade. But for me, I'm going to ignore that one and wait for that. Right. Ladies and gentlemen, that's all the currencies that I wanted to look at for today, the Sunday. During the week, I will upload a different set of assets so that we keep building. We will remember it's the second financial quarter. The thing that rocked us, in the first financial quarter is actually slowly slowing down, which is technically the war. Right, so now we want to really have a very good analysis of all currency trades, right? So believe you me, you really want to be subscribed, because what I would ask is I probably won't be able to do London session this week again, because I'm still like chasing a deadline, guys, make sure the course is perfect. We're going to start uploading and adding old students onto the new platform, etc. But I'll have another look at this is our what we trade document. When you register, we send you this, and I'll have a look at more assets in here that we generally don't always look at, and then upload another analysis during the week for you guys, probably by Wednesday-ish. So look out for that. So that will be war room number 62 on the channel. Just I want to cast the net as wide as possible, look at the capital, and start allocating some trade ideas on the chart. Sit and forget stuff, right? And then I say to you guys, I'd look at 3 indices today. S&P 500, just to kind of like gauge where it is. I always struggle with this ticker. I don't know why. I probably should just put it on my watch list. And then I also like a specific chart. I don't know if that's the right one, but let's see. Right, so this really reminds me of NASDAQ, right? NASDAQ was crawling up a trend line like this, then drop. Right, so we're going to get the same type of analysis on S&P 500, which is very normal, right? So we've got that area up there, the area down there that we marked up together last time. Let's just quickly go to the weekly time frame. Right, that's when that 14 March recovery. That was such a clean prediction, man. I did say that's going to be my best trade call of 2022. I know it. I don't think there'll ever be an amazing long-term. I was very blessed and lucky to actually be on the money to the exact point of when the stock market is going to start recovering. Those of you who watched the 14th of February video and then acted on it, right? It doesn't help if you just watched the video and did nothing. But if you acted on it, then I want you to know that's definitely my best. On S&P 500, unlike NASDAQ, right? There's not a much hindering price to keep moving up, right? So there's still a little bit of room to the upside, but you might still get like a redistribution of a price seekers to the downside, but it's still about almost just under 4%, from where we used to be. So you kind of like want to keep track of that, right? On the daily time frame, broken supply, reacting to current supply, into this. Ugh, man, that's not nice. This could work. It's just not really a good trade for me. It could work, right? So fingers crossed. I could miss out on this trade entirely because of how safe I'm playing it. I'm not really trying to be aggressive, right? Waiting all the way down here is definitely not a good idea, but nonetheless. So there are a couple of options. Number one, you want to see what 4,300 looks like. Let's see what 4,300 looks like. Kinihashi, and then H4, and then normal candlesticks. Okay, so 14,300 has already been used, right? That's the FOMC level, right? 365 candle, markets dropped all the way down into this clean order block there. That's also been used. Yeah, man. So it doesn't seem like it's going to happen anytime soon. And I know people be like, Leroy, you think price is going to go down there? That's what they say to me last year when I kept saying equities are going to drop. Same thing with Bitcoin. We're going to go to 34, 37. I actually wanted Bitcoin to go even lower. Those of you who are following me, man, I was ready to kill Bitcoin, like like long term, like drop, dude, just drop, right? Right. So that's where I'll be looking to buy S&P 500, 14,200, I guess. Let's go to the daily time frame. I'm talking about just me, what I consider to be a safe enough entry, and what I understand about the markets. That would be a nice place for price to return back to at least. Please remember, once you find your 365 number, always give price 25 to 30 points to breathe. So anywhere between 4,225, etc., is acceptable, right? Just look at your structure, look at how you're drawing your zones. Don't forget about your area of competition, and then you should be fine. You really should be fine, right? But yeah, there's some activity up here. I don't want to deny that. I just don't believe it's the best competitive place to be right now as a buyer. There's that there. Then there's also this right now that's happening. I just don't believe there's a good place to be as a buyer. Unless if you're already in. Remember, if you're already in, then you drew a trend line, and now you're just stop loss trading your profits, right? NASDAQ, I'm not going to waste my time, guys. We've been through this so many times, right? So we're going to skip NASDAQ. Then we're going to go to US30 because we haven't looked at US30 in a long time. All right, it looks exactly the same, right? It looks exactly the same. Markets buzzing all the way here where we said, there's going to be a big pause, long-term climb coming across. That's daily. Let's go to H4. Show you what I see. Okay, so this was removed in. Probably told you guys not to sell here. If it's marked red, it means we spoke about it and I say don't do it, right? Cowboy areas. Right, and then markets created a bearish engulfing pattern right there. Markets kind of reacted, and then there's that NASDAQ pattern you see crawling up a trend line. So all indices fell. It's like a very clean prediction I gave you guys on Thursday and at 8 a.m. on Friday morning before NFP dropped. Right, and then I've got these two areas circled out. So for me, my safer buy is down here, it seems. But no, it's not, because this area has been played, man. Right, I'm fine here personally. I see why I've got a line by 14 34,121. I get it now. I get what I was trying to tell myself. Personally, I'm fine all the way down here. I'm only in NAS right now, so we shall see. Yeah, and that's perfect. Close enough for me. If you go H, we are on the H4. Let's go 2 hour time frame. All right, and then let's just clean this up. So let's just, then we're just going to add 25 to 30 points. Beautiful. Beautiful. Right, so I'm fine down there. I'm not going to take a buy here, just so we're all clear. I'm not going to take a buy there. I'm not going to take a buy there. I'm not going to take a buy anyway. And yeah, I might never be triggered. People are like, yeah, you think Dow's going to come all the way down for you, Leroy? You think it's going to come back there for you? Who do you think you are? Yeah, I get it. I get it. But yeah, I have no interest in buying, anyway high here. Right, if markets clear this zone, then sure, these will be better. But until that's not done, until if markets keeps bouncing here and not clearing, then might as well come down. Might as well come down and collect some serious buyers. And these are the buyers you want to take to the next, to the end of the year. By the way, these are the buys you want to take to the end of the year. Once that war stuff gets cleared, then we're challenging the highs now, right? We're challenging the all-time highs, and that's a different story. You don't want to take profit on the trades you're going to get into these indices right now. You want to have the discipline to pay yourself at the end of the year. I promise you, your trading life will change. You'll have more equity to do different things. But yeah, 365, man, I hope you enjoyed this. It's been a beautiful 2 hours, 15 minutes with you. I hope you've liked the video. If you haven't taken the course, if you're a new member, I definitely encourage you to take down. Make use of the link down below. The 9th of April is in 6 days from now, and then the discount is done. The discount is done. All right, so shake my hand. I appreciate you. Get learning, get studying, and I'll see you during the week. I promise to do something special for you guys on the channel, look at more assets and give out trade codes. There is going to be a video uploaded today, maybe straight after this one. It should be ready by then anyways, of me showing you all the trades we agreed to take in March in these war rooms, and how only one AUDUSD had a stop loss hit, but it's difficult to give me an L there because in the public Telegram group, there's a link down below as well for the public Telegram group. If in the public Telegram group, I told you I'm scaling out, so it's a stop loss hit for the analysis, but I told you lock profits, break even, or get out, because AUD is a little bit weirdly strong. And we've been talking about this in different rooms throughout. But I appreciate you. God bless. Shake my hand one more time. The trading strategy is not the problem. You are. Work on that. You are. With all respect, you are. I always was. For my first 4 losing years, I was the problem. Markets do the same thing. As random as they are, they do the same boring stuff all the time. You are. Work on yourself. Work on yourself. Shake my hand. See you next time, guys. Cheers.